They thought they could hide it. They thought that if they halted the electronic market on Friday, if they painted the tape and showed you a fake price, you wouldn't notice that the vaults are empty. But they forgot one thing. You can lie about the price of a contract. You cannot lie about the production of a microchip. Ladies and gentlemen, the game is over. While you were sleeping last night, while the rest of the world was distracted by the Sunday football games, a private Gulfstream G650 jet touched down at the General Leobardo C. Ruiz International Airport in Zacatecas, Mexico. Why does that matter? Because Zacatecas is not a tourist destination. Zacatecas is the heart of the Fresnillo Silver Belt. It is where the silver comes from. And the people on that plane, they weren't tourists, and they weren't bankers. According to a leak I received 4 hours ago from a source in logistics, a source that has never been wrong, those men were senior procurement executives from Samsung Electronics. Do you understand what is happening? Samsung is the second largest consumer of industrial silver on the planet. They need it for your phones. They need it for their new solid-state EV batteries. They need it for the AI chips that run the world. Normally, Samsung buys their silver from the London bullion market. They place an order, and an armored truck delivers it. But this morning, on a Sunday, they flew halfway across the world to stand at the gate of a Mexican mine and beg for metal. This is the signal we have been waiting for. This is the Project Blue Wire leak. It confirms that the glitch we saw on Friday wasn't a computer error. It was a default. The London vaults failed to deliver. The inventory that the COMEX claims to have, it doesn't exist. Samsung knows this. That is why they are in Mexico. They are bypassing the entire financial system. They are going straight to the source with a checkbook that has no limit. And here is the part that should make your blood run cold if you are short this market. We are hearing reports that Samsung is offering $15. is ordered above the spot price for immediate delivery. The price on your screen says $63, $80. The price Samsung is paying right now in the dirt of Mexico is $78. Euro. There are two prices now. There is the fake price for you, the retail investor, designed to make you panic and sell. And there is the real price for the industrial giants, who are panic buying everything that isn't bolted down. This is exactly what happened with uranium in 2007. This is what happened with palladium in 2019. The physical users realized the paper market was a fraud, and they broke it. Monday morning is going to be a massacre. If Samsung secures that metal in Mexico, that is 20 million ounces that will never hit the open market. It's gone. It's absorbed. And they aren't the only ones. We have confirmation that Tesla has paused their just-in-time delivery contracts. Why? Because you can't have just-in-time when there is none left in time. The supply chain has snapped. But wait, it gets worse. The reason Samsung is panicking isn't just because the COMEX is empty. It's because of what China did 6 hours ago. You need to see this. You need to see this because this is the smoking gun. For months, the mainstream media has been distracting you. They've been talking about inflation data and Fed minutes. They've been dangling keys in front of your face while the house is being robbed behind your back. The reason Samsung executives are scrambling in the Mexican desert right now isn't just because the COMEX is low on inventory. It's because the world's factory just locked its doors. I have received confirmation from 2 independent sources in the Shanghai Free Trade Zone. At approximately 4:00 a.m. local time, while New York was celebrating their market pause, the People's Bank of China issued a silent directive to the Shanghai Gold Exchange. It wasn't a press release. It wasn't on the news. It was a window guidance order. The order is simple. 0 export tolerance. Effective immediately, no silver bars with a purity of 999 or higher are allowed to leave Chinese ports. Do you grasp the magnitude of this? China is the largest refiner of silver in the world. They process the ore from South America, from Africa, from Australia. They turn it into the industrial bars that the rest of the world relies on. For the last 20 years, the West has been happy to let China do the dirty work. We send them the rock, they send us the shiny bars. But today, the rock went in, but the bars aren't coming out. Why would they do this? Why now? Because China isn't playing a financial game. They are playing a resource war. They know that whoever controls the silver controls the energy transition. They are building 450 gigawatts of solar capacity this year. They need every single ounce of silver they refine just to keep their own lights on. They looked at the COMEX glitch on Friday. They saw the Western banks struggling to find metal, and they said, good luck. They just pulled 40% of the global refined silver supply off the market in a single night. This is the nightmare scenario for the Apples, the Teslas, and yes, the Samsungs of the world. They rely on that Chinese supply chain. Without it, their factories in Vietnam and Korea grind to a halt in less than 3 weeks. That is why Samsung is in Mexico. They are trying to replace the Chinese supply that just vanished. They are fighting for survival, and the market knows it. Look at the spread. Look at the Shanghai premium. Usually silver trades at roughly the same price everywhere. If it's cheaper in New York, a trader buys it there and sells it in Shanghai to make a quick profit. That's called arbitrage. It keeps the prices locked together, but right now, silver in Shanghai is trading at the equivalent of $74, $50. Silver in New York is stuck at $63, $80. That is an $11 spread. In the financial world, that is impossible. That is like seeing gravity work in London, but not in New York. Why isn't the arbitrage closing the gap? Why aren't traders buying the cheap American silver to sell to China? Because there is no cheap American silver. The arbitrage is broken because you cannot get delivery. You cannot buy the metal in New York to ship it. The banks will give you cash. They will give you a settlement, but they will not give you the bar. The $63 and $80 price is a lie. It is a museum exhibit of a price that used to exist. The $74, $50 price in Shanghai, that is the floor. That is the price of physical reality. And Samsung paying $78 in Mexico, that's the panic price. So we have a three-tiered market. The fantasy, comics paper price, 63. The reality, Shanghai physical price, 74. The emergency, direct-to-mine price, 78 plus. Which price do you think your local dealer is going to use when they open tomorrow morning? Do you think they are going to sell you an Eagle for $65 when Samsung is paying $78 for raw industrial bars? Not a chance. The dealers are not stupid. They are watching the same flight trackers I am. They are seeing the same leaks from Shanghai. I checked the wholesale networks 10 minutes ago. The ask price, the price dealers pay to restock, has gone no quote. The wholesalers aren't even giving a price anymore. They are waiting for Monday. They are hoarding the metal because they know that tomorrow the $63 price tag is going to be incinerated. And who is the victim here? Who is the one trapped in the middle of this geopolitical vice? The short sellers? The bullion banks? JP Morgan? Bank of America? They are sitting on massive short positions. They bet billions that silver would fall. They need to buy silver back to cover those bets. But who are they going to buy from? China? Closed? Mexico? Bought by Samsung. The comics vaults? Empty. They are trapped in a burning room with no doors. When the market opens on Monday, they have only one option left. They have to bid. They have to bid against Samsung. They have to bid against the Chinese Communist Party. They have to bid against you. This is not a trading opportunity. This is a liquidation event. The banks are about to lose control of the one asset they have suppressed for 50 years. And there is one final piece to this puzzle. A piece that nobody's talking about because it's happening in the shadows of the Middle East. If you think the Shanghai premium is bad, wait until you hear what is happening in the back alleys of the Dubai Financial District right now. Dubai is the gray market of the world. It's where the real physical deals happen when the Western exchanges are closed for the weekend. Usually on a Sunday, it's business as usual. Millions of dollars flow through the gold souk. But today, the flow has stopped. I'm getting reports from multiple sources on the ground, traders I have known for years, people who never panic, and they are all telling me the same thing. The ask is gone. One major wholesaler allegedly sent a broadcast message to his network this morning. Stop selling. 1,000 doze bars gone. $69 bid, no offer. Do you understand what no offer means in trader speak? It means that even if you walked into a shop in Dubai right now with a suitcase full of cash, offering $69, $70, even $75 an ounce, they would not sell to you. The sellers have gone on strike. Why? Because they aren't stupid. They know what Samsung is doing in Mexico. They see the same reports we do about the Chinese export ban. They know that the first dealer to sell his silver at Friday's closing price of $63, $80 is going to be bankrupt by Monday lunch. So they are hoarding it. They are sitting on their inventory. They are effectively telling the paper market, your price is fake, and until you pay us the real price, the vault door stays shut. This is a global vote of no confidence in the COMEX. And here's the rumor that is terrifying the sovereign wealth funds. We are hearing chatter, unconfirmed but persistent, that a silent bank run has started on the allocated storage accounts in Zurich and Dubai. Wealthy investors, the kind of people who own islands, not ETFs, are apparently contacting their vault operators and demanding to physically inspect their metal. Or worse, demanding to take it home. Why? Because of the glitch. When the market froze on Friday, it sent a shockwave of distrust through the ultra-wealthy. They realized that if the exchange can pause the price, they might pause withdrawals next. So they are pulling their metal out. Now, on a Sunday. This creates a supply shock on top of a demand shock. Demand, Samsung and big tech are panic buying at the mine. Supply, China has restricted exports. Inventory, the rich are taking their silver out of the system. There's nothing left for the banks to cover their shorts with. And that brings us to the most dangerous 12 hours of your life as an investor. The banks, JP Morgan, Bank of America, HSBC, are staring at a mathematical impossibility. They are short hundreds of millions of ounces. They expected to cover those shorts by inducing a panic sell-off on Friday. They thought the glitch and the margin hike would scare you into selling your physical silver back to them. But you didn't sell, did you? The dealers in Dubai aren't selling. Samsung isn't selling. They are buying more. So now the banks have to cover their shorts in a market with zero liquidity. When the Asian markets open in a few hours, Sunday night US time, the trading algorithm is going to look for sellers. It will find none. It will bid $64. No sellers. It will bid $65. No sellers. It will bid $70. And that is when the gap up happens. The price will teleport. It will skip numbers. It might open at $75. If you are sitting there with cash, waiting for a pullback to $60, you are delusional. That world ended on Friday at 2:14 p.m. We are entering the unobtainium phase. I checked the websites of major U.S. dealers 10 minutes ago. Some have removed the buy button for Silver Eagles. Others have added warnings about shipping delays. They are protecting themselves. And if the dealers are scared to sell, you should be terrified to be holding cash. This isn't just about a weekend squeeze. This is about the next 10 years. Samsung isn't buying silver to speculate. They are buying it because their new solid-state batteries need it. Solar panels need it. The missiles being built in Raytheon factories need it. The world runs on silver, and the world just realized it doesn't have enough. The paper silver era, the era where bankers could suppress the price by printing unlimited contracts, died this weekend. It was killed by a procurement manager from Samsung landing in Mexico, and the realization that the physical metal is gone, real supply and demand has finally arrived. And it is vengeful. So what do you do right now? What is your move? The Samsung jets are on the ground in Mexico. The vaults in Shanghai are locked. The dealers in Dubai have walked away from the table. The board is set. The pieces are moving. And for the first time in 40 years, you are holding the winning hand. But having the winning hand doesn't matter if you fold before the river card is dealt. The banks know they are cornered. And a cornered animal is the most dangerous thing in nature. They have one weapon left. It isn't money. They are out of real money. It isn't metal. They are out of metal. Their final weapon is psychology. Between now and Monday morning, you're going to see a level of propaganda that will make your head spin. They will release analyst reports saying silver is in a bubble. They might even try to smash the paper price one last time during the thin Asian trading hours tonight. They might flash the price down to $60 for 10 minutes just to trigger your stop losses, just to shake the tree one last time. Do not fall for it. If you see a red candle tonight, you laugh. You laugh because you know that price is a ghost. You know that Samsung isn't looking at the red candle. They are writing a check for $78. We are entering the unobtainium phase. Think about what that means. For your entire life, you have been able to trade paper currency for real assets whenever you wanted. You earned dollars, you bought gold, you earned euros, you bought silver. That window is closing. We are moving into a world where your currency is no longer valid for the purchase of strategic resources. You can have $1 million in the bank, but if the dealer has no inventory, you are poor. Samsung understands this. That's why they are bypassing the market. China understands this. That's why they banned exports. The only people who don't understand this are the retail investors, who are still worried about resistance lines on a chart. This isn't a chart pattern. This is a supply collapse. Listen to me closely. The reason you stacked silver wasn't to make a 20% profit in fiat currency. You didn't stack to trade your real money back for their fake money the moment it went up a little bit. You stacked for this moment. You stacked for the moment when the music stopped. You stacked for the moment when the supply chains broke. You stacked because you knew deep down that the math didn't add up, that they couldn't print prosperity forever. Well, the math just broke. The debt clock just ran out of time. Tomorrow morning, the world is going to wake up and realize that the cheap silver they built their modern lives on, the silver in their phones, their cars, their missiles, is gone. And the only people holding it are us. The banks want you to be scared. They want you to think this is a crisis. This is not a crisis for you. This is a crisis for them. This is their default. This is their failure. This is their panic. For you, this is vindication. So tonight, sleep soundly. Let the bankers pace their floors in London and New York. Let the algorithms burn out, trying to find sellers who don't exist. You have the metal. You have the power. Hold the line. Do not waver. And if you see a gap up tomorrow, do not sell. Smile, because it's just the beginning. I will see you on the battlefield at market open.